Hi, and welcome again to another edition of Market Analysis for today, February 22nd. I'm Giovanni Benacourt, analyst, trader, and operator with Vantage Markets. Well, the stock market finally got the memo after a staunch refusal to accept that the Federal Reserve has more work to do in the battle against inflation. The stocks eventually came around Tuesday. All three major US stock indexes fell at least 2%, each booking their worst daily drop since December, as the reality of the further interest rate hikes seemingly began to set in. It was a significant sell off. The Dow Jones Industrial Average has now wiped out all of its 2023 gains so far, edging into the red for the year. Traders now see a 21% chance of a 50 basis points hike at the central bank's March meeting, according to the CME FedWatch tool. It's an abrupt shift. A week ago it was 12%, and a month ago it was 0%. The story of the rest of the 2023 has also hastily been rewritten as expectations for the federal funds rate at the end of the year rose 12.5 basis points to 5.19%, according to Deutsche Bank analysts. The bond market was weaker on the uptick than equities, but also cemented its view that more hikes are coming. The yield on the 2 year Treasury jumped to 4.729%, its highest level since 2007. What's odd is that for all of the talk of markets and the Fed being data dependent, the sell-off happened on a day with little in the way of economic data. Maybe investors took the long weekend to mull things over, or this was a presidential sale and some see opportunity. Analysts said earlier this week that the stock market could peak for the year in the first quarter, with the fallout from the Fed's monetary tightening still lying ahead. After Tuesday's sell-off, it may already have peaked. Well, so let's take a look at what we can encounter. So here's our sell-off from yesterday. I have lowered my resistance to 12,200 for the Nasdaq. So that sell-off, could we see opportunities here? A lot of people could have bought a dip. Will we see a continuation to the upside? Well, let's see if that's the case, or if this is just some repositioning and then the market will continue to sell off, or will it just enter into a consolidation stage and just be consolidating, fluctuating right around the 12,100 marker? That's yet to be seen. But if we were to open right now, the Dow will open higher if we open right now, but we're not an opening, but into an hour. So the S&P, here's S&P 4,000 is that magical or that the strong psychological support number. We are very, very close to it. Will it be broken? Once if it does is broken, or once it's violated, penetrated, the market does come back and trades below it, then you want to grab just round numbers 39.90, 39.80, or if you want, you can go to the left, look to the left, and see where is the low. Like for example, this January 25th low, could it come back all the way down to 39.63, 39.60, okay, or around that? It could, I mean, who knows? But so far, for right now, the RSI is pointing flat. So could this just be some profit taking for those who who jump in the rally of the sell-off? It could be, but what I'm thinking is just this is gonna be one of those days that the market is gonna be mostly flattish. The same for the Dow. Here the Dow has really actually just traded lower. 33,000 is the support for the Dow now. Would it come down towards it? Perhaps. Right now, this doji could tell us it will. So as the imply of the Dow right now would be that it opens to the upside, but the consensus is or at least the momentum is to the downside. So I'm most likely that will continue. 33,000 is my target. I am selling the Dow this morning. Crude oil has fluctuated lower. It violated the support of $75, but it quickly retraced and it is trading above it. So I've placed a $2 range for crude oil I am bullish on crude oil and I am long in crude oil today. Nat gas, I'm out of nat gas. It's just very, 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 there's no volume in it, and it's actually oversold. So anything to the upside, just bring head to yourself. Stay out of it for right now. Then we have gold. Gold is also flattish. It's looking to stay around the 1830, just like I said yesterday. So it's gonna do just very, 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 very low volume in the metals. Silver also just idling around here. Copper is the one that actually kind of took a and is sell off and close that gap, but is actually trading back up. So 420 will be my first resistance. I had a 425. Anyhow, Bitcoin, yeah, Bitcoin is looking to stay around 24,000. Bitcoin has this weight of trading, but so far I'm just looking at it for it to stay around that 24,000 marker. Then the euro, the currencies are looking to stay around this level of 106.5 or 106 at least. Let's see if that will be the case for it. Low volume in today's trading range. Also, the pound looking to stay around the 121 marker because the dollar index is looking to stay around the 104. Uh, Now, if we see a strong pickup on the dollar index, then we understand that currencies, gold will fall. If dollar index happens to lose its bottom or just start trading lower and back down to 103.50, then we'll see a rally in gold and currencies and crude oil. Okay, so be wary today. It's gonna be one of those sticky days, I will call it. So be careful and have your stop places, your stop loss in place, and don't move them. All right. Have a nice day. See you.